Greetings, everybody. Welcome to Liberty Call. Today is Friday, June 2nd, 2023. Hope everybody's having a fantastical day out there in the interwebs. Still pretty overcast here in Colorado, in case you're wondering about the weather here, but very sunny across the markets. I mean, everyone was very excited because the debt deal passed the Senate yesterday, and it's on its way to Brandon's desk, so we'll see what happens there. So everyone was just jitty with excitement, and it looks like the markets were appreciating it. So if it's your first time watching Liberty Call, thank you very much for being here. Please give me some thumbs up, likes, shares, subscribes. Press all these buttons down here. All righty. Well, let's go ahead and jump into the numbers, see how they turned out for today. S&P 500 was up, Dow Jones was up 2.12%, 701 points, closed at 33,762. S&P 500 was up 1.41%, closed at 4280. NASDAQ was up 1.07%, closed at 13,240. The VIX fell 6.71%. It's down to 1460. Canada was up 1.79. Brazil was up 1.83. And Mexico was up 0.96. Going across the Atlantic, Germany was up 1.25%. UK was up 1.56%. France was up 1.87%. Netherlands was up 1.13%. Spain was up 1.6%. Netherlands up 1.13%. Spain was up 1.63%. Italy up 1.85%. Switzerland up 1.3%. And Portugal up 1.71%. In Russia, both exchanges were in the red. The MOEX was flat, down 0.08%, and the RTSI was down 0.98%. Overnight in Asia, the Nikkei was up, and Japan was up 1.21%. Australia was up 0.48%. New Zealand down 0.3%. In China, the Shanghai was up 0.79%. The Shenzhen Component up 1.5%. China A50 up 1.75%. DJ Shanghai up 1% even. Hang Seng up 4.02%, and the Taiwan weighted up 1.18% for the day. All righty. Let's go ahead and check out the markets for the week, starting out with the S&P 500. It's going to finish the week off up about 1.36%. The Dow 30 finishes the week off around 2% up. NASDAQ up about 0.52%, about 0.5%. Dow Utilities up about 0.39%, and the Dow Transports finished the week off up about 1.5%. So everything was up, some better than others, but that's how we're doing for the week. All right. Let's go ahead and get that off my screen, and let's dive on over to the economic data for the week. U.S. jobless claims came in at 232,000. Forecast was 235. Last week's number was 230, so about the same as last week. Continuing jobless claims came in at 1.795. Forecast was 1.8 million. Previous number was 1.789. So again, within a few thousand of last week's number. The Consumer Confidence Index came in at 102.3. Forecast was 99. So evidently people still feel pretty good. Last month's number was a 103.7. The Job Openings and Labor Turnover Survey, the JOLTs report, shows that there were 10.103 million jobs available right now. Forecast was 9.775. Last month's number was 9.745. So it looks like we went up by about 200,000 or 300,000 there. The non-farm employment change grew by 278,000. Forecast was 170,000. Previous number was 291, so just a little bit of a recede from last month's number. The ISM Manufacturing Purchasing Managers Index came in at a 46.9. Forecast was 47, so just a hair under. Last month's number was 47.1, so we did slip a little bit from last month. And Nonfarm Payrolls grew by, what was the other one? Oh, that was the ADP non-farm employment change. Nonfarm Payrolls grew by 339,000. Forecast was 180. Previous number was 294. And last but not least, the employment rate or unemployment rate came in at 3.7%. Forecast was 3.5%. Last month's number was a 3.4%. All right. So, data looks pretty good, but at the same time, it doesn't. So, that's kind of what's weird about the market going up so dramatically today. And really the little bit of a rally we've had recently is that the data sucks. We've got way too much debt, and the yield curve is still massively inverted. So, just looking at all the stuff that I would pay attention to, it's not something that I really feel good about. So, All right, let's go to today's market recap. S&P 500 rallies as jobs report surprises to the upside. U.S. averts a default. Oh no, that would have been terrible. All righty. On Friday, the S&P 500 experienced a surge as the U.S. moved closer to avoiding a default with the successful passage of a measure aimed at lifting the debt ceiling. It doesn't really lift it, just pauses, freezes it, or makes it invisible, I guess, for a year and a half. Additionally, a robust jobs report further fueled optimism in the stock market. In May, the U.S. economy added 339,000 jobs, surpassing expectations of 180. However, the unemployment rate rose more than anticipated to 3.7%, and wage growth was lower than expected. Following this strong jobs report, Morgan Stanley expressed the view that the Federal Reserve would keep interest rates unchanged at its June meeting, as the conditions for resuming rate hikes would be challenging to meet. Really? Well, I've read other people who work at the Fed who seem to think the opposite. Simultaneously, a measure to raise the debt limit and reduce government spending was passed. I don't know about reducing spending. Passed in the Senate, representing a crucial final step for the legislation. The bill now awaits President Biden's signature, averting the possibility of an unprecedented default. Oh my God, it'd be terrible. And again, we covered this in an article early this week or last week. We've defaulted on our bills. I mean, it's never happened, or it's happened before. Energy stocks have led the market higher for a second consecutive day, driven by speculation that OPEC and its allies, OPEC Plus, might announce production cuts at their meeting in Vienna on Sunday. This speculation resulted in increased oil prices. The materials sector also experienced gains, primarily due to an 8% surge in DuPont Chemours. The chemical company, along with Chemours and Corteva, reached an agreement to settle allegations of contaminating public water systems with toxic substances known as forever chemicals, or PFAs. In contrast, the technology sector lagged behind the broader market gains, although it's still expected to end the week with a strong performance. The sector had previously experienced a surge in chip stocks driven by advancements in artificial intelligence, particularly NVIDIA. Broadcom Inc. reported quarterly results that exceeded expectations, leading to a nearly 3% increase in its stock. The company also expressed the expectation that more than a quarter of its fiscal 2024 revenue would be generated by AI models such as ChatGPT. Ahead of its developer conference, Apple Inc. saw a slight increase in stock price. Morgan Stanley raised its price target for Apple, citing optimism regarding the launch of a new virtual reality headset that is expected to drive growth. Lululemon Athletica lifted its guidance after reporting quarterly results that exceeded estimates, resulting in a 12% increase in its shares. However, SentinelOne Inc., a cybersecurity company, experienced a 36% decline in its stock after cutting its annual sales outlook and falling short of Wall Street revenue estimates amid a weaker macroeconomic backdrop. Insane. Boy, wasn't that some interesting stuff. All righty. One last article, and I'll let you out of here for the week. It's titled "The Republican Debt Ceiling Deal," in quotes, "is exactly what we expected," written by Ryan McMacken at the Mises Institute. So, I mean, we've heard it's going to do all these great things and save the country, but let's see what's really going on. The Biden administration and congressional Republicans reached a budget deal that has widely been criticized for its lack of significant changes to federal spending. Contrary to the predictions of economic catastrophe and calls to raise the debt ceiling without conditions the deal maintains the status quo. The agreement places tentative caps on spending, allowing for a 1% increase each year over the next 2 years, but it does not return federal spending to pre-COVID levels. Again, we're going back to COVID spending levels, not post-COVID. We're only going back to here when we were way down here to start with. So, I mean, I guess these fools just want to spend $5 or $6 trillion a year that's not their money. Furthermore, the deal eliminates the debt ceiling until January of 25. Yeah, right till after the election, and then chaos breaks out. If the Republic is still standing at that point. Under the agreement, discretionary spending, which includes miscellaneous and military spending, will continue to rise without a substantial pause. Mandatory spending on programs like Social Security, Medicare, and Medicaid is also expected to increase annually. Even in the most frugal scenario, annual increases of $60 billion or more can be anticipated. The deal fails to address the possibility of economic recessions or the need for stimulus measures and bailouts, which would further inflate spending. This outcome aligns with predictions by Mises.org, a website known for its views on limited government intervention. It was expected that the debt deal would be raised again debt ceiling would be raised again, and the federal spending would not be significantly reduced. The total spending remains over $1 trillion higher than in 2019, despite the near $1 trillion deficits accumulated during the Trump administration. There were hopes among several observers that the Republican negotiators would secure substantial concessions in federal spending and regulation. However, this did not materialize, and historical data that show that there is no correlation between Republican control of the government and the trajectory of federal spending. In fact, spending often accelerates during Republican administrations. Yeah, they're all evil bastards. Public sentiment also plays a role in perpetuating high government spending. Polls indicate that a majority of conservatives want increased military spending. Why? Who are these conservatives? I mean, you want to continue to send your kids off to the desert halfway around the world to get blown up? I don't. Where was I? And small minorities advocate for spending reductions in various programs. Voters tend to punish politicians who cut spending, but they are more likely to object to spending on specific areas they disagree with. As a result, there is little incentive in Washington to reduce overall federal spending as elected officials prioritize funding for their favorite interest groups. Unless there's a significant ideological shift among voters, it is unlikely that substantial cuts in government spending will occur. The current reality demonstrates that the majority of the population supports increased government spending on programs they deem important. Yeah, right. The presence of intellectuals like Murray Rothbard and Ludwig von Mises, who explain the detrimental effects of government spending and deficits, helps keep some checks on spending. However, without widespread recognition of these dangers, Washington may continue down a path of unrestrained money printing. I personally think it's all going to fall apart. That's just my own personal view, and I'm kind of hoping and praying on that one. So, because that's the only way I'm going to get out from under being a wage slave to this evil government. So, alrighty. Well, that's everything I had for the week. I hope everyone has a fantastic weekend. Unfortunately, it's only a 2-day weekend this time. So, those 3-day weekends are really nice. And, if you're like my wife, she had a 4-day weekend because she took last Friday off. So she probably just wanted to spend more time with me because I'm so awesome. But anyways, all right. Well, that's everything I had for today. If anyone needs anything from me, please go to dsafinancialgroup.com. All my contact information is there. I hope you have a terrific weekend, and I'll talk to you next time. Adios.